Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Tuesday, February the 28th, 2023. Last day of the month. They're rolling by pretty fast now. We had another really interesting day that basically was kind of difficult to trade initially. Did throw out some bones, so you're able to get a couple of trades and make your money. And then at about 2 o'clock, or actually 2 o'clock, the market kicked in to the downside, and it kicked in a big way. And I want to talk about that a little bit. I want to talk about how I'm interpreting this particular move and what I think is coming up. It is following plan, so to speak, pretty cleanly. I want to open this. First of all, let's just start quickly saying we're still in that intermediate C wave down. And so far, I'm still satisfied with this completing minor wave 1 out of 5, which will comprise that intermediate C wave down. And I always point up there because of the yellow. Yellow designates intermediate. So this high was the completion point for intermediate wave B, and now we're in that C wave decline. We finished minor wave 1. We're in a minor wave 2 corrective or counter trend move. So the trend again has resumed to the downside. So all of these upside moves have been counter trend. And so again, we were in a counter trend move on a minor degree level and continue to look for the possibility and likely the strong. It could still happen. And I would totally be anticipating and expecting it. But the frustrations lately has been that the market refuses to kind of turn and begin to head lower. I mean, it has, but continue to head lower with purpose, as I call it. Selling with purpose. It's like they're just get out of the way because we are going to hit anything that's standing there, sitting there, waiting there. So it truly does turn into what many people would call attempting to catch a falling knife type move. You just end up with death by 1,000 cuts. Okay, so that's the kind of move that could happen. Now, what the deal was today, from what I understand, that there was a large player that needed to roll what is commonly called a collar position, and that is where they just wrap a lot of different positions, puts and call spreads around different strikes, and it needed to be rolled. And so many traders that I talked to, many traders were expecting it to come in March, closer to the March expiration or the last expiration in March to end the quarter. So it looks like it may have been done today, the last day of February. So just because it was so large that it could really put a disruption, and to know it, you get a lot of people coming in front of you, et cetera, et cetera. So it looks like the trade, part of it, all of it, I do not know. But it looks like that's what took place this afternoon, and with the market going bam, bam, bam. Now, let's just kind of talk Elliott here for a minute. If we're in this minor wave 2 going up, the counter trend move, then within that, it's going to be on a minute degree, an A, a B, and a C. So within this B wave, this internal B wave, it's been a lot of churning back and forth between a very tight range. And that's very frustrating when you're trying to determine, well, where do I get long, where do I get short? Because the market certainly is not giving me an easy time at choosing or even following my indicators. So you can catch a one here and there, and you get in and you make your money and you get out. But it's not been an easy task. All right, and that is a characteristic of a B wave. And the smaller the degree, the more difficult it can be. A bigger B wave, you're going to have those larger moves, and they will be sustainable. The smaller, they're encapsulated within an hour. So you might get it, and you might get a piece of it, but it can be more difficult. No, enough said there. So what we got going on, in my view, is a minor wave 2. Here are the fibs for that minor wave 2. When we looked at them, the most common relationship on a Fibonacci basis for a second wave, whether it's minor, intermediate, minute, etc., these are what are characteristic for a second wave, are the 50 to 62% retracement levels. Now, that's what's most common. That doesn't mean it has to happen that way every single time. But I would be looking for a move towards at least 382, 12,255, or at least let's get over the A wave, which is 12,193. It looked like they were going to do that today. And so I was looking for it. And they got up to 12,175, I'm going to call it. I think the high was 172, actually, almost 173. And then, of course, took a nosedive. So here's what I think we got going on in here. We have a very protracted, but it's an ABC, or AB, and this is sometimes is really calculated but strange C wave, but it does fit. Now I'm going to put the very small a here, and then we get an ABCB. So this is minute, this is a subminute degree, and we're in a subminute C wave down. Well, I already know C waves can be like harsh. They can be quick. They can be smacky in the jaw. They're going down. And that's pretty much what happened. And again, it's not, Elliott does not portend or pretend that it's going to know the reason that a move is coming. It's just that we know that it's a C wave, and here's the characteristics of it. So it fits pretty cleanly. Did I know that beforehand? No, I was looking for this thing to finish going up. Put in another AB. I got the AB part correct, but I'm thinking 1, 2, and we're in a third, and then suddenly it stops on a dime and nosedives. Well, this is how, and this is why. Now, does it fit the count? Absolutely. Should we get some more? Very likely. We're going to get more downside before we turn it again, go higher. Now, what's going to negate this whole count, in my view? Let's start putting up some of our Fibonacci's, and then we can go from there. But first thing I want to put up is I want to put up some retracements, and that's for the entire second wave. So we have those here. Now I want to go in and I want to give an estimate on a B wave. So in other words, if this is A and this is going to be a B wave, I want to put some parameters, and then those are also retracements. So we're going to go down here and tell it we want those and go right up to there. So what we're honing in on is 0.618. In fact, we touched it today. So an ABCB could fit very cleanly. And that would then consider this to be the C wave, ABC, put a B under it. What could be next? Because it really is being left, and it was a pretty hard day. And then again, they came back pretty harshly on the close and pushed very strong. So the reluctance, I think, of traders or anybody just to walk in and say, yeah, we're just going to start buying it, with that overhang of, are they done with that position? Are they done rolling, getting out, moving, or whatever was going on? Is it complete? We don't know. So I'm going to have to continue to allow for downside, and within the count, it fits. So we have additional room down to 12,000, period, 12,000 even, we're going to call it. And that on this larger basis is just merely a Fibonacci 70.5, which we know is alternately called the sweet spot. So there are many times it'll come down there. Head fake people, it's like, okay, we're out of here. We're going, and stop and then turn and proceed to go into the next phase of the larger move. What else can we put up here? I'm going to draw and put on another set, and these are extensions, and that's going to be for the C wave. And on that one, I'm going to go from the top of the A wave to the bottom of the A wave up to the top of what we're going to perceive as wave B internally. So here again, we do have some fibs that come right in here, 12,025, 12,011, 12,000. So those are three levels coming off that the market can continue to go down to. If it breaks there, then we're looking for 11,973 and 11,950. That one kind of sticks out, and it's kind of a bright color because it's an important level. It's a 1.382, and in a B wave, yeah, they can do it. They can do it. In fact, it could come all the way down to the bottom of the A wave, which is all right in there, sticking like a sore thumb, 11,925. So that's where it can drop to in an overflow, or if that position is not done, or whatever the situation may be that the market decides we got to go more. Globex is just beginning, and they're kind of suggesting we're not quite done yet. They're not past the low so far of what we did in the regular session, which is 25.75. So 12,025.75. So we have to allow for a little bit additional downside. We can have it all the way down to 138.2. Now get this. It's not something that I've seen every day, and I don't normally look for it, or in the past have accepted it as solid Elliott, but it is. And here's why. Because if it's going to follow straight fibs, and we break below this low, then we're only really looking for additional. It could drop, it would appear to be a solid break, but it can drop all the way down to 11,822 and be called an irregular B wave. So within this minor wave 2, the B wave produces the additional low. Now, I'm hard pressed to turn around and say I have seen these many times before, because I have not in a wave 2 position. I have seen them in a fourth wave position on varying degrees. The biggest one that I can remember, of course, is cycle wave 4, which topped in 2000, and actually didn't top. The B wave topped in 2008. And then the C wave was the financial collapse. So that was an irregular B wave, by the way, in the Dow, because it went up to an all-time high all by itself. So in any case, we have to allow for it. But it could be a wild ride down, a quick and wild ride down. And here is the other side of this coin, that I have been talking that once this is done, and I'm putting a minor 2 wherever, a minor third wave would be a butt kicker. It's going to come in, it's going to hit you in the teeth, it's going to knock you down. Excuse me, if you get in its way. That's the type of move that I'm looking at. And you got a little bit of a taste of it. Again, we don't necessarily have to know why. It doesn't have to come flying out of the news at us, although it can. Here it did it today, and I'm sure people are looking, and I'll be wondering what the financial media is talking about on why all the indexes decided to take a nosedive. Massive position being rolled out. So that's the Elliott. We have to, just to re-encapsulate, I am looking for the completion of the minute B wave within our minute C wave rally, again, giving us a run back up, breaking above 12,189, 12,190, and likely back above 12,200. We have the 200 EMA still sitting at 12,205. We have the 200 EMA sitting at 12,233. And then we have resistance on a fib basis at 12,255. Could the NASDAQ get there with that hard slam that we had this afternoon and possible continued additional hard slam? Absolutely, I can. And it can do it by Friday if it wants to. So keep that in mind. And I'm going to have to see how this thing all would come off, because guess what? Even in this position, I'm still looking for 5 waves, but I'm attaching it to something a little bit different. So it's going to be an interesting couple of days here as we wait for the market to tell us exactly which count. So the alternative would be is that minor wave 2 is done, and this is 1, 2, and now we're dropping in the third. And that then, folks, would suggest we start breaking down, seriously breaking down, as we get out of the 11,000s. I'm going to just leave that out there. That's not what I'm looking for, but don't be surprised, because that is what will produce it. It is going to be a surprise. Somebody makes a big change. Something happens around whatever. Okay, let's go over to the S&P. By the way, the moving averages, at least on the hourly, yep, they're kind of turning, they're kind of arcing, they're kind of coming into place. And right now, the 20 is starting to drop below the 50, and that'll throw it into a negative pole if indeed it does. All right, over in the S&P. It truly is the same story. I had initially thought, wow, cool. Nice little B wave, A, B, C, B. I'm looking for that C wave up. And it kind of had a difficult beginning, but it got itself all the way back to 4,000 again. And I thought, well, you know, maybe we're going. Maybe this time we'll get up to that 4038 number. That's where the 382 level is for a minor second wave. Upside potential, 4067, 4096 on a technical basis, pure Fibonacci technical. Now, if we shift that over and try to put it into the current narrative, it doesn't seem like it's all that taken seriously. But I'll tell you what is, 4,000, 4,038, yeah, if they get it going, they'll buy it up to there. And without looking, if it's necessary, they'll push it and continue to push it because they'll get participation from all the markets. And it's position rolling, it's position whatever, it's whatever we want to call it, it's what's happening. And so it's better to have an idea of what its capabilities would be, even if it goes against the grain of what reality is telling us is coming right down the street. So it's not a matter of you got to position yourself for it. It's a matter of you just have to be able to trade it. So anything that goes on between here and when we really start to go down, which might be, because you're going to have clear direction, right now, it's still not clear. It hasn't been. We're hanging out around 4,000 for a long time now. I think since December, maybe even later, totally from October, we're hanging around between, like from here, let's say 3,800 to 4,041, 42. We're just hanging out. And it's like, okay, let's make a decision because interest rates are going to go higher, et cetera, et cetera, et cetera. So back here at the ranch, we got the A. I put the B there, but like in the NASDAQ, I think I'll just take it off for now. But you know at least what I'm doing. I minute wave B, same story. We have the A, B, C. We have the B, 1, 2. So if I had to go A, B, C, B. Now we're in that C wave down, which are already trying. They are stepping up a little bit, pulling it up. Now let's put in some fibs. First, we're going to put up just our retracements, and that would be just for the B wave. So right now in the S&P, we have kind of slipped below, and that was during regular trading, the sweet spot, which was at 39.70. And that actually held. And it's where it's kind of hanging out right now, a little bit below, a little bit above, but right at that level. So that's the sweet spot in terms of where the B wave could end. And we would put that C down here, put that B, and then expect the rally. If we don't get the rally, our next stop is likely going to be 39.50. Let's see how that might happen. Now I'm going to add the extensions. And we're just connecting wave A and wave B to give us what the projected C wave might look like. And I'm going to open this up and then bring it into the picture, open it up again, and bring it up into the picture so we can see what's going on inside and where we can look. So I think throughout this entire B wave process, even though if we do come down and break below 39.50 or 39.43, which is the pre-existing low, then we got to be looking for 39.36 down to 39.30, and that likely for the C wave, because then we're touching into levels for this larger B wave, which could come into play. And then again, we're looking at the C wave being 1.618 of the A wave and the entire B wave being 1.382 of the A wave. That's an irregular B. That would be your Fibonacci correlation, that here or here, can be an irregular B wave. So in this current situation, as I described in the NASDAQ, what my alternate would be if this thing just keeps going and we start to break these levels, we break below 3,900s, for example, then that would be likely giving us the clue that the minor wave 2 is done up here And we're coming off, that's going to somehow be wave 1, ABC 2, and we're dropping in the third. That would be a minute 1, minute 2. We're dropping in the then minute 3 of minor 3. That would be the alternate. Please don't get confused here. That's not my intention. I'm showing you possibilities if the market gives it up from here and starts dropping below these levels and below these levels. So it drops below 3,900. It's got to drop 70 plus points before I start tossing out and going like, possibility, this is done and we're going to go. And what you will see at the time is, like I said, that we would see in the NASDAQ. The market just starts giving it up. It just goes. So those would be the levels. Now, in between those, we do have support at 39.66, broken but recovered. 39.62 still open. A little bit of a black hole, and now we're dropping down to where we get an ABC flat. And that would be 39.51 down to 39.43. That puts it that in. Where wave C would be 100% of wave A of 39.51, and I would consider the whole move a flat. If we have an A, we got a B, and the C wave takes us back just to there. And then minor 2 is done. Now, is that possible? The S&P is a much cleaner bill than what the NASDAQ is giving us. But I guess I would say both of them can produce the same type of a move. The NASDAQ gets down to the lows from last week, as the S&P does, or close to it. I mean, here it's within 8 points. Yeah, good enough. It's flat, and I'm looking for this thing to go back up right towards this level, but back above 4,000. Do I believe it can do that? You betcha I do. Go 50 points? Sure, in a day. Now, we've seen it. They're out there. They got big positions. They got to put something on, take something off. It all can happen. So that's what we've got going on. Right now, we're kind of like giving a little bit of a squeeze here. But it's not filling in yet because we don't have that data. I suppose it will. So here we got for the S&P. Can it go down? It sure can. I'm looking for at least another, because if I take this down to the 15-minute, I would suggest it looking like the NASI. 1, 2, 3, 4, and we get one more 5. That's what I would put that together as. So downside can be limited in a couple of ways. It can come down to this level, which is 39.60, which we had all day today, resting orders. We had resting orders at 39.60. They dropped all those bids. As soon as they started to come in and hit it like that, they dropped those bids. They pulled them because this was happening. I guess maybe they didn't want to buy it there unless it was the start of the day versus the end of the day. So once more, we could get down there. That would be level 1 and still complete the C wave, right? So we did 1, 2, 3, little 4. We get the 5th, could come here, could come here. Dropping at 20 points from here should not be a problem. I really don't think so. We still have Asian, we still have Europe, and then it's back to the US. And if we get down there and then start the rally, perfect. Makes half the battle for the US desks of all of these big banks to get their positions done. Reestablish if that's what they need to do, since we probably saw a lot of end of the month type of adjusting, reassessing, redoing whatever they do with their portfolios. So we got that. Now, if it breaks that, still going to be a B wave. Then we're going to be looking for what the Fibonacci wants to tell us. Wave C then could be 1.382 of wave A. This is wave A. Wave C can be 1.382, and that's 39.30. We have 1.236 for the larger B wave at 39.30. A little bit below 28, 29. So it's all basically in the same area. We have another cluster at 39.17, and I'm going to say down to probably 39.10-ish. No, a little bit higher, 13.14. So they're tight coming off in terms of where support could land and turn the market higher again. For me personally, I like the flat because that momentum to rally it might be there, or the wave pattern is calling for an additional rally. I don't believe that the market could be able to sustain something to 40, 60, 40, 95 under the current environment surrounding the market. So unless we get a very strong turnaround in the bond market, then maybe, yeah, you're going to find some catalyst to kind of push it up. Bar none to the fact that I'm not seeing that right now. I don't see it. All right, so for tomorrow, I guess I'm going to be looking for the completion of the C wave and for the next larger C wave, right? So this is the sub-minute C to finish minute B, and then we got a minute C wave up. And within it, 5 waves. So we got a little bit of work to do if the market is actually going to pull it off. All right, that's it for today. Our next up will be on Wednesday, March the 1st.